Hi friends, let's take a look at Link. Link versus the Bitcoin and Link versus the dollar coin. So Link has been doing what we kind of spoke about it doing, and it's quite nice in a sense to see, although my heart does bleed for all the perma bulls out there. It's kind of nice to see when it obeys the technical analysis that we've spoken about, and that's lovely. So if we go to the 24-hour time frame, you can see here that what we've experienced in yesterday's candle and then coming down to where we find the prices just now are exactly as we actually said that they could be. So that's good. I'm going to remove this wee loop here that I've got on. Shout out to Northwest Nerd there for that. Thanks for the reminder. And by the way, if anybody's out there looking for some entertainment to watch, you could check out the science show Look Around You. If you've seen it, let me know in the comments down below. It's a UK thing. When I first saw it, I tuned in after having been on a night out. And I thought it was a real science show for the first wee minute or two. It was really, really great. And I remember it was the episode where he's putting his hand in to take the egg out of the water. Anyway, very funny. I loved that. So anyway, good show to watch. Don't know why I'm telling you about that. Well, I do actually, because the loop circle chat, that's a wee esoteric look around you joke. Okay, so we've come down here to the lower end of our inside pitchfork. This is inside, right? Yeah, it is. And we've actually then kind of pushed a little bit past it. Don't have a parallel channel on here giving us an extension of it, which maybe I should have. So I'll just do that now. Maybe there is one that's only visible on a lower time frame. Don't 100% know off the top of my head right now. But let's just draw this in. So we've got one here anyhow. And we can see then that, there's a distance to go here before things could get, worrying. Moving down past the 95k area where we find the median line of that parallel channel would be kind of worrying for us. And then you can see the prices going down to the next lower target down there towards that 87, perhaps even as far as 85, 83 area for a 786 Fibonacci retracement. Should we see this sort of downward trend continue? We have followed down below the 236 there. Coming down here invalidates this Fibonacci, so we're still waiting to see if this will get truly undone with the full thing undone all the way back down to our previous lows there at 91k, or if we'll actually move up above the 109k and get back into this pitchfork with the potential for, at the very least, even bearish structured macro point of view price action with the potential to move towards the top side. There is the question as well, could we potentially have some sort of Adam and Eve-esque bottom here with this over the longer period of time, looking at that structure and then that structure. And I would like to sort of move away from thoughts along those lines, instead kind of look towards things like this low's come in lower than the previous low over here, and so far we've come in and we just about managed to achieve some bullish divergence, but we didn't quite here in the RSI. And will we see some of that with any subsequent price action? What we have here as well in DMI on the 24-hour time frame is a movement where we see the strengthening of the trend towards the downside while the ADX is above 20, and we currently are at that 100k area price target for us. So if you're taking profit at this point, no bother, that's all decent. If you're entering into a long at this point, then that's understandable, with the 618 golden pocket being here, giving you an easy enough way to manage your risk. If you're looking at this line here of the pitchfork at that 102k area and saying, well, we really need to close this on a decent time frame, say for instance like a 4-hour candle above this line for you to take a long off the back of, that's also quite a good strategy. Easy to manage your risk that way. Do I have 2 parallel channels now? Yes, I do. So I didn't need that second one after all. It's just on the lower term time frames. Well, there you go. And that's all. That all could be, making it very easy for you to trade this thing. Now, there should be no reason for you to struggle when it comes to making decisions to help your own trading account there off the back of that. Now, we don't have bullish divergence either between these two lows just here on the RSI or the MACD or the DMI or the stochastics, in fact. So really what you're seeing here is the yearning of this to perhaps go and test those lower targets. But of course, we have had the 618 golden pocket giving you an easy enough way of managing your risk, as we've already covered in a bit of detail. So I suppose I can just get rid of one of these parallel channels for now. Just leave that one. Don't know which one it was. We'll find out in due course. Been jumping over to the other USD pairing one where we had this descending wedge, and they're saying, well, this is the most positive thing. It only had 2 touches towards the top side, so that's not enough to be properly concerned with it, to be honest with you. And instead, what we really have now is perhaps this descending wedge, which could continue on bit longer, just still only got, 2 touches on the downside. It's not particularly good. Could be looking at a parallel channel towards the downside as well, giving you easy enough targets to break above, to at least get a sort of change, a step change in how things are going. If you wanted to, you could have maybe looked at this as being some sort of little short-term descending triangle effort that we had the full measured move off the back of, and you could then take that as being positive and say, well, we've done all we needed to do, and that gives us an area where we can have a low risk management long, indeed, or perhaps an upper one. But this is the dollar pricing, sorry, that I was saying. Now, and this is at $11.15. So we're still in a decent enough position, because those 618 targets that we haven't achieved here, like we did wick down to on the Bitcoin pairing chart, we haven't achieved on the dollar pairing, that exists down here at that 850 zone. But we've come down to this Magnolia line, and that is, of course, the 50% area at $10.76 again. So we've done that target, and that's been nice to see, giving you an easy enough entry there. And if you have done that, then you're already finding yourself in a position where you can even move your stop loss into profit if you wanted to. But what we're looking at from the broader term perspective is, can we bust above 11.53 and try up again towards the $12 mark? And then $13 is a necessity really thereafter to create a valid Fibonacci towards the top side that we could say, look, we've done what we needed to do. And I demonstrate this all the time on the channel, but I'll just demonstrate it again, because it's one of those lessons that you probably can't get enough of, really, in terms of enhancing your agility when it comes to trading. First off, looking down here at where this wick came in at, you can see that the 236 on this is just above our heads there at 11.25, offering up targets of 12.50, 13.50 and 14.50 for the next 3 steps up the way until you get to that golden pocket zone. So that's really quite positive if we can push past 11.25. But coming in here body to body, on the other hand, just let me just reconfigure that slightly. Then you can see what I was meaning before with movements up past that $12 area being important, because that's where this 236 comes in at. And of course, if we did move up then beyond this 382, then we've got a very much valid Fibonacci retracement area on our hands for these upper targets, which could take us up towards $15 perhaps for that full golden pocket retrace. So you can see the dynamic that exists on the chart there, and I would highly recommend that you look out towards these particular key areas in terms of managing your risk going forwards with this thing, because of course, there's plenty of key areas that I've highlighted there very easily for you to take a look at and to really position yourself well. Looking at this here, you can see that we've kind of been strengthening towards the top side, having had that happen with this ADX going up above 20, and indeed actually coming in at a minute just at the cusp of 25, really securing a bit more strength towards the downside. And if we look at these lows as we've been going along doing them, then you can see that the highs here of the downward trend. If we look at the lows as it happens, you can see that the low here came in here more strongly here, but as well, this is here giving us the potential for hidden bearish divergence, along with just straight up bearish convergence here when we're looking at the top sides as well, with the strength that's continued to go with this shorter term time frame 4-hour candles downward movement. So that's all coming in here at this 50% area, and it gives you that question of, will we see this move then down beyond it or not? Now, of course, the more times that resistance gets tested doesn't mean jack about whether or not that's making it stronger or less strong. That's just an oversimplification. It's called reductionist, extrematic. What is it called? That ridicule where you? Well, anyway, it's too basic, too reductionist. If you look here though, between these two lows, you can see quite distinct bullish divergence across the board in all these oscillators before we saw the price turn around and then go into a sideways period of movement for a while. And what you see here between these lows on the way down, the equivalent of these two, between these ones here, whatever, you don't see that on the go. You don't see that bullish divergence. Now, there could be some on the MAC, and no, there isn't. So you just don't see it there, right? So that's not getting stronger, this resistance here, or this support necessarily, and movements down below it could, of course, spell this movement down here, and that's what's to look out for, of course. Now, going over to this other one, we had a failure of this inverted head and shoulders, as you can see here at the neckline twice, when we came in to do this one. These things fail 60%, so more often than they don't fail. I'm going to remove that from the charts, but it was a useful little lesson for for us as we saw the diminishing volume. We saw the bullish divergence between the two, the shoulder and the head. Looked like it could be a nice setup for a nice inverted head and shoulders on the 4-hour time frame, but we failed to go past the neckline, giving you again that knowledge that confirmation in terms of these patterns is important, and indeed a failed pattern is as good as a working one. Having seen the prices drop off from, in terms of percentages, from this movement at the top down to where we are now here of a 20% movement down as a result of failing that pattern. So that's interesting. We can also just enhance our vision in terms of this smaller term thought processes here with this second Fibonacci drawn in here, just going down from this high to this low and showing you that we're above the 236 on this one that comes in at 1138. So if we start to see some sort of really shorter term price action then, and still go in for what could ultimately be a lower high and retain a bearish structure, the golden pocket actually comes in here right at the zone of our previous high. So we could look up towards that $12 area and say that that is key for pushing past our previous high in terms of the lower highs, our previous lower high, and then put in a higher high versus that one. And that would be a key structural change in terms of this time frame, and that would feed back up towards the 24-hour. Now, I want to say a big thank you to everybody who tunes into these episodes. Okay, this is a direct thank you from my mouth to your ear holes. Thank you so much for tuning in, and I really do appreciate it. And I really do appreciate the fact that we're all great friends now. Now you can say, hey, don't be crazy, you're just some dude on YouTube that I'm watching, but I actually really genuinely appreciate people choosing to spend time out of their day here with me on this channel when you could be watching any channel. And I really then want to reward that effort on your part with a friendly atmosphere where you know that I'm your buddy, and I read all the comments and I get back to them, and it's all great and I love all that, so you know that that's a thing, but also as well with real value to take away from your episodes. And I hope that you got some of that today. If you haven't hit that subscribe button, then go ahead and do so. I'd really, really appreciate it. That'd be great. And if you share these videos with your friends, that'd also be excellent. Talking youtube.com/RockyOutcrop to do that quite easily. If you want to enter into a competition to get a giveaway of 10x the number of views the channel gets throughout the month, currently we're sat there at 20,877. So I think we could get to 30,000 views in the month, and I reckon then I could give away a few 100,000 Satoshi, 300,000 Satoshi or something like that to somebody who wants to take part. If we get enough people doing it and the whole thing goes crazy, then I'll bump that up to enough to open up to get a reward of one of these leveraged trading accounts that you have, so you deposit X and then you get a reward. So whatever that amount happens to be, it's fairly significant, I think, in terms of getting your trading started, if that was the case. But of course, big future with this channel, lots of time to do all that sort of stuff down the line. I just really want to say I massively appreciate you tuning in, and I hope that you get that value, those takeaway values to have here on the go with your trading, help you become a better trader. Thank you so much. I'll see you in the next episode. I'll be back again tomorrow with more of this. If you want to see Bitcoin, Ethereum, and Tezos, I also do videos for them. Highly recommend them. They really do keep your finger on the pulse of the market. I'll catch you in the next episode.